When you think about where the intelligence of your assets or knowledge about your operations traditionally reside, you will often think about that very experienced colleague that everyone goes to in a time of crisis, or just to double check something that's really critical for that information. And this is quite normal for a lot of organizations. So when you talk to people who work in the field and ask them, where do you get your information from? It's from places like shift reports, Excel files, control systems, those experienced colleagues. And enough data exists that we're able to run our assets and facilities safely. But it is the minimum amount of data. The problem was never about having access to data. It was about having access to good data, the correct data that's scattered across multiple disparate systems, the inefficient and manumatic way of getting access to that, and that none of them were connected together, none of these processes. So for us, when we talk or we're building intelligence or resilience into an organization, it requires three things. First, it requires that you have access to good, relevant data. Today, we're ingesting more than 100 different data sources into our platform. Fit-for-purpose platform, of course, is required. But second, inside that platform, you need to contextualize the data, making sure that it reflects not just the information, but also the way people work. Because this is what will allow you to build a knowledge graph of your organization. Lastly, you need to be able to embed AI, agentic systems, AI harnesses into your knowledge graph that will allow you to activate workflows for these jobs sitting here on top of the platform in an end-to-end way. So when you can do that, you can start to rewire how these people perform their tasks. Once this workflow is in place, you can start to think, what parts of it do I start to automate? What parts can I use to self-improve the system, until you eventually start to rewrite the division of labor from a person to a machine, allowing people to work in a more smarter and more efficient way. When we talk about AI, and opportunities associated with AI, you also have to consider some of the risks associated with AI, especially in high consequence industries that we work towards. We need to think about the impact of a wrong decision, because it can be quite catastrophic if it's done in the wrong way. So for us to scale AI, there has to be trust embedded to the processes that we use to scale that. More and more, you're going to hear about AI harnesses. These are the guardrails built around your AI frameworks, your AI models, the outputs from your AI systems that will be used to take a decision. And deterministic models are really, really important for our industry in order to set up those guardrails. AI is excellent at optimizing. That's what is very, very powerful in doing. But it will optimize beyond the safety critical margins of your plant. It will optimize beyond what's practical, beyond what's allowed. So being able to set up the outputs, which are determined very fast, or I would say prescribed very fast from AI, put them through these deterministic guardrails, you can then start to trust what's coming from your systems. It's these foundations that will actually allow us to scale out and rewire organizations at speed, but also in a trustworthy manner. Once these systems are in place, how are you able then to start using them when things inevitably go wrong? And there's a spectrum here of things that go wrong. Everything from just half an hour of an unplanned shutdown to a catastrophic failure in a facility that can lead to very dramatic impacts. So this is something that we deal with on a continuous basis in our industry. When you have those foundational pillars in place, you can start to build on the resilience side of your assets. When you have that platform, you're able to see the whole asset remotely. So that's situational awareness, where you might not have people on the site, but you have and can tap into a global support team, an onshore support team is now readily and quickly available. That's your first start point, or your first pillar. You can then start to plan and act from anywhere. So instead of having to fly people to that facility or move people to that facility, you can actually start your planning, your emergency modes remotely. Everyone has a shared view of the problem. Everyone has a shared view of the solution. And that's really, really important because it's about speed in decisions and confidence in those decisions. Access to the right people that may not be at the asset from your global centers of excellence. Third, you can start to maintain smarter. So we have a lot of these platforms in play, and a lot of the feedback that we're getting when things go down, or from an unplanned perspective, is the speed of getting things back up. Numbers like, we're getting things back up 4 to 5 hours faster, which is about 50% faster in some cases. Maintenance, being able to tap into other technologies such as drones, robotics, being able to orchestrate them from this platform is also tremendously important from a resilience point of view. There may be situations where you can't send people into that plant, but you will have a complete overview through your digital twin where you can orchestrate these machines across your asset to collect that information. And then this becomes quite normalized in times where there isn't a crisis, where it's just day-to-day maintenance workflows. So you start to embed them in a way that you have trust, and you can start to self-improve with this technology. Finally, and the last one, flexing the asset. In order for you to flex on the asset, we operate these assets in a way that we want to keep them within a safety limit, right? In order for us to be able to understand what happens if you go beyond those limits, you need to simulate. And this is where physics-based simulators play a role. This is not about data ingestion. This is about embedding physics, simulation, having this knowledge and understanding about how your behavior or how your asset behaves. It's a big difference between just building a dashboard with a simple data source to actually moving it to a decision tool that you can trust and you can test. So having that ability to flex the operational envelope of your asset is super important for building resilience. So how does this work in reality? So in 2020, together with Shell, we delivered the world's first fully integrated reservoir to market digital twin. And it's been running ever since, where we brought together the data, the visualization, the ways of working, and simulation into one live environment where we all had a single place to work together. And it's been evolving ever since. So to show you what this looks like, we have gas coming from the Orma Longna fields. It is processed in Nyhamna, and then it's exported all the way to the UK through the Sleipner pipeline. This basically provides 20% of the UK's total gas consumption. So when we talk about building resilience, this is, if anything goes down, this is not just something that impacts us locally, it's something that has a significant impact on wider Europe. And this gas has been extremely important. The access to this gas has been extremely important since the war in Ukraine. So one of the use cases we looked at after delivering this has been, how do we expand the amount of gas through the pipe? Because there's been such a demand for energy in Europe. And we were able to work together with the team, and we were able to increase the capacity by more than 1%. This is quite a significant number when you think how high the production efficiency was already in operation in Orma Longna and Nyhamna. But there was true use of this technology. We were able to squeeze out more efficiency and increase the amount of gas through the pipe. So this is really what resilience looks like in action. Having access to all of this technology, ensuring that we maintain the uptime so we can keep the production at a level that we can meet the demand of our users. And at the same time, we can also increase and flex on the capacity of the plant while keeping such a high production efficiency. It's been a true transformative journey for all of us, and I'm looking forward to talking more about this with Oscar.
Indeed, Shane, we're talking about a very serious topic today. At S&P Global, we perceived it as the most severe energy crisis in modern history. And this is first of all expressed by the rise in oil prices, as you can see on the left graph. Oil prices reached a peak of $120 a few weeks ago. It's easing down now a little bit with the hopes of a resolution. But still, our outlooks show a more disturbing picture. We think that in the coming weeks, oil prices will rise back well above $100 in the June-July time period and August time period as summer activities pick up. And then for the longer period, we think oil prices may ease as oil production and transport starts again, but well above $100 towards $100 in 2027. Our worst case scenario is that oil prices will go up towards 150 if hostilities pick up again, and if there's a swift resolution in the coming days, maybe few weeks, then we'll see oil prices ease down towards their bandwidth of 80 to 100. However, they will stay well above earlier prices of about $60 to $80 for the next year. And all of this is caused by the closing, obviously, by the Strait of Hormuz. As you can see, tankers out of the strait dropped from about 135 per day to an average of 12 per day in the last couple of months. And it's not just crude oil, but you can see here by the different colors that it's also various other types of commodities that are coming out of the Gulf. And so what does it mean for the world? On the left side, there is a list of countries that depend on imports of oil and gas out of the Gulf, and you can see the amount of percentages here. And they range from about 20-30% to, in some cases, 100% for oil and gas. But as I said, it's not just oil and gas. Oil and gas, there are now currently 1.2 barrels of oil out of the market. The blow is somewhat softened by the ramp up of production in other countries, but also by the drawdown of inventories across the world. And so there's about 5 million barrels of oil average per day being drawn out of these inventories at the moment. And then there's these refined products. So there's a lot of refined products coming out of the Gulf. You can see here the change in numbers. So for instance, jet fuels is often talked about. More than a quarter of the global jet fuel is sort of restricted at the moment. And the same is for diesel and gasoline. So, and then other commodities. There's also sulfur. About half of the global sulfur trade comes out of the Middle East that supports the development of fertilizers. And there's also feedstocks for plastics, and even aluminium is coming out of the Gulf. So you see that the impact is much broader than just oil and gas. And on top of that, there's another long-term trend that I want to point to. With all of this increase in prices in energy and feedstocks, we already had another issue around prices. Here's our capital cost index for the upstream, oil and gas. 2000 is 100, and we saw that ramping up pretty quickly, doubling in prices in the early 2000s. But every time we saw a drop in oil prices, we saw a cost reset. That means that cost would go down as oil prices would go down. That coupling has been broken in the last few years. So after COVID, when the ramp up of energy prices happened, we didn't see capital costs going down. So on top of what is happening now, and on top of where companies struggle with their capital cost and operational costs already, we don't see this cost reset. We haven't seen this cost reset. And so that means that prices are likely to go up again in the coming time.
All right. Thanks for joining us today, Oscar. That was it was a very interesting presentation. I'm looking forward to diving into more of that now.
Yeah, thanks, Shane. And it's always a pleasure being back here. First of all, congratulations on your new office, but second, on your new name.
Oh yeah, thank you very much. Falkor, yeah. So we rebranded this week. So it's been going on for a while. So we're very excited to actually have the launch this week. So thank you very much.
Yeah.
Oscar, you painted quite the grim picture there. Is there any silver lining to your research or what you see happening in the market these days?
Well, yes, there's always a silver lining. Indeed, the clouds are pretty dark. What we, as I discussed, we see, of course, feedstocks issues. We see capital cost rising. And so when you look at the landscape, there's not much, but there is some, and we've seen that with past crises. So the first thing you see is efficiency of productivity. So people are able to do more with less. And this is always, and it's simple things like switching the light off and keep, instead of keeping it burning the whole time. And you also see that around facilities. So that's one thing companies can do. Look at, okay, are there things we can switch off? Are there things we can replace with more efficient things, more doing, increasing productivity?
Yeah. We get quite creative as an industry in times of crisis.
I must say there is one thing that you don't want to sort of mix up efficiency with demand destruction. That's also something we see, is because high prices are high, things are actually stopping. So refineries are just ending. People are flying less, for instance, because prices are high. And so you see the same around other forms of transportation, also in the industry. So, but efficiency, we've seen it in the past, is a way to sort of alleviate some of the pain. The second thing is flexibility. We're just expanding the operating envelope. Can you run with one compressor instead of two? Can you run with one generator instead of two? So that's the thing. You see, if you really dive in digital, I'm sure it was in your presentation, so we're going to dive into it. But of course, digital is one of the things that helps you understand how big is this envelope, what can you do safely, and where are the actual boundaries, instead of running on standard parameters. The final thing is, and it's also a bit on the slide that's shown in the background now, is innovation. That people are going to start to innovate. They're going to a good example that we've recently seen is an offshore platform that is using renewable energy to power its production, using solar and wind and batteries as a backup. And we're asking, what if there's no sun or wind? Well, we just shut in. That the whole system is sort of aligned to that. That's innovation. It's actually replacing an existing system, diesel generators, with a new system, in this case, renewables. So those are the things we expect to see coming up in the near future.
Yeah, very interesting. I mean, as you said, when times get hard, that's when you actually start to double down. But I think a lot of the work has been done in the good times. So we're actually able to hedge through these crisis moments as well, which is actually quite good that we have done it. We're not just rushing to catch up.
As I said, digitalization is playing a big role into that. Shane, you laid out in your presentation the data, the platform, the applications on top of it. We'll come back to that in a moment also. But how do you make that work in practice?
How to make it work in practice? No, I think you need to start with the information you have. As I said in my presentation, we have access to the data that requires us to operate our plants today at a safe level. But it's the absolute minimum amount of data that we have access to. So starting with that piece, ingesting as much data as possible, but thinking it through, that when you ingest that information, you should also be ingesting the ways of working. That was something that was missing some years ago when we started with digitalization. It was like, just get all the data in, and then we figure out what we're going to do with it. And that's kind of, to some extent, a solved problem, or can be solved problem. So when we start building out this knowledge graph, this is where you have to bring the information, that domain understanding of what you're trying to solve for. So it's back to the basics of understand your business case. Ingest the relevant data for that business case, put it in context with ways of working. And this is becoming even more foundational with AI, because as I mentioned, AI can't reason across something that doesn't exist. So we have to have well-documented processes. And this is kind of the missing piece now for a successful scale out of this technology. The other piece that we need to do and think about, especially because we're such a safety conscious industry, high risk industry, safety critical, is the use of this technology from the point of view of what it prescribes. So should we trust everything this technology tells us? We should probably test it, right? And more we're talking about having these deterministic guardrails set up and having them in place. And for us, that's vitally important. And it's back to the simulation side of it, the technology that we've been using in this industry for decades, the technology that we trust. Obviously, embedding it close to these platforms, this knowledge substrate, and making sure that it's set up in the right way so you get fast responses. Because historically, that has been quite computationally heavy and quite slow. Very accurate, very trustworthy, but slow. And this is what we've been doing. especially when it comes to the platform play, to scale this technology in a safe way. So quite practical approach, but I think a very necessary approach as well.
And a very integrated approach.
100%. This is not something you layer on, because then you're just building inefficiencies into a deployment of digitalization platforms. This is something that has to be embedded, has to be close to the tech stack that you're actually deploying, for sure.
Okay.
So just bouncing on from that, you guys in S&P Global, you have been doing digital twins for years, and we've seen digital twins evolve. We hear from our customers, how it's evolving. What are the necessary characteristics for a successful digital twin? Because you do look at quite a lot of use cases, and you benchmark, from a very neutral and perspective.
It's a very interesting question, and it's like everybody asks me, a digital twin. There's so many different versions. How do you look at that? And I always go, so I want to take a step back. And
has anyone defined a name?
Yeah,
of it,
and I'm always saying it's a concept. Yeah. It's like if somebody tells you I'm going on holiday next week. Everybody understands what you're meaning, but nobody knows what you're going to do, what it's going to cost, how long is it going to take. It's like
people.
An empty sense, but still, it's very informative. And it's the same with the digital twin. So if you break down to it, as you said, you have data, you have an integration platform, and then you have an application on top, most of it now supported by AI. We see 2 or 3 different sort of archetypes. The first one is more or less the focused one. And there's 2 types. There's the one that focuses on asset, often augmented or enriched with tags, which is the real-time data. Yeah. That's where a lot of, at least when we look at deployments, it's where a lot of deployments focus on. And the second thing is really the one, the process. So it simulates processes. It often has a deterministic first principle component to it, or it's using industrial analytics and AI. And so we see those 2. Those are sort of one you could, so the asset type, the other a process type perhaps. The one that we see most interesting is what you were alluding to, is the integrated one, is sort of a system twin. Yeah. And it's often focused, as you mentioned, on a business case. So it has a specific, and it was in your presentation, it's around a gas processing facility, or it's around an LNG facility, GTL facility, or it's around an offshore platform, things like that. It's very, very focused on a practical application, and it brings on a number of these elements depending on the business case. And that's where we see, from a deployment perspective, also the most, it's difficult to say value, because then value often translates into monetary or production. We do see that, but then there are other things that create value sometimes, just pure flow assurance or pure new infill welling drills if you upstream, or you talk a new LNG train when you talk about LNG. So but if you look at from a digital twin perspective, we see the system twin, this integrated twin with embedded deterministic models, with a good sort of visual representation. That's where we see most effectiveness. And the reason why is actually quite simple. So why do you have a digital twin, and why do you do it? It's to make decisions. Yeah. So in the end, and to put it very simpler, there are 2 things that help you make good decision. First of all, situational awareness, what happened in the past, what's happening now. And the second thing is, what's the future going to look like? So you need predictions for that. And so a digital twin that brings together those elements, good situation awareness, good understanding of what happened in the past, how the asset looks like. And the second thing, simulations, analytics, AI that can help you predict the future, support you with future activities, bringing those 2 things together. That's a really strong sort of deployment.
So a twin of twins, it's that combination, bringing it all together. Yeah, we hear this, there are a lot of hard return of investments, but when we talk to the market, the initial deployment of these technologies, they talk about return of impact or return on outcomes, and more we see those impacts being significant and obviously being linked to hard ROI, and of course, as you said, we're doing more with less as an industry, so that means we are changing how people work, or how jobs are being performed, or tasks are being performed because of this technology. And you hear from the markets that AI is going to change it even more in an accelerated pace, velocity. So it's it's a world that we have to keep up with.
Yeah.
But we have to do it, at least from our perspective, I feel we have to do it in a safe way, within the guardrails for our industry that makes sense. Because we need to scale this technology fast, but in the right way as well. And on that front, I'm really keen to follow up more on what your future outlooks are, or looking your future perspective.
So it's we basically see, if you look in the digital space, and this is something that also relates to, you know, the sort of energy crisis that we're in now, is we think there's sort of two pathways. The one is around you can call it virtual reality. It's around the multiverse or omniverse or metaverse, depending on who, you know, which term you want to. It's where humans still are a key central element. They execute, they look at everything. They're basically the brains of the system, but they're fully entrenched sort of in this system. The other thing is autonomous operations, is where humans have a supervisory role. They're in the loop or on the loop. Obviously, in reality, you will see two elements of that. You see, on the one hand, if you look at this sort of virtual reality, remote operations play a major role. And the other thing, this whole digital twin is very much where people are on the loop or in the loop.
They're not independent of each other much. I mean, one supports the other in a way.
So that's a bit where we see the future going. Those are sort of end states. Probably it's going to be a hybrid of that, but you can clearly see those different routes emerging at. But saying you come up from operations, if you look at this, you know, this crisis that we're in now, you know, energy companies in any form, whether it's upstream, midstream, downstream, maybe even down into utilities in the petrochemical side. Thinking of that in your experience in operations, how would you translate that into, you know, what companies can do?
Oh, yeah. God, when I started in operation, I was a full of promise, young, bright-eyed engineer. You know, what somewhat surprises me, I was 25 years ago when I started into my first facility, and I remember going through induction week. Everyone gets, you know, how to lift, and you learn about the facility, and you get your standard operating procedures. And I'm very sure it's still done the exact same way. There's still induction weeks. People go through this training. What surprised me?
Videos, get a hard hat.
Exactly, like, you know. And I think what surprised me, we're doing the exact same thing as I did 25 years ago. All right, and I can guarantee you what happened after my induction week. I got what they called a buddy, which was more a senior or experienced engineer technician. And they took the folder I carried very carefully out with all my SOPs in there, and he goes, "Okay, Shane, now you're finished with that. Let me show you how the work is really done," right? And I can guarantee you that is still going on today. There's the way you are technically taught how to do the job, and there's the way the job is actually done. And for me, this is a problem when it comes to technology, you know, because people say, "Oh, let's throw AI on it." You're going to throw AI on the theoretical way the job should be done. That's not the way it's really done. So for us, there is an element of unglamorous work in order to scale AI. So
I like that term.
It's unglamorous, but necessary work, you know, where you have to start documenting your processes, the real processes of how work is done. You know, this is back to basic job shadowing, you know, marking down how people do stuff, what they spend time in their day doing, pulling that knowledge into a platform, actually mapping this out and saying, okay, this is how this is done. This was the information required for this step, mapping that out, and then actually trying to understand, okay, can this piece be automated? In a lot of cases, it can. So if you think of a job as a job stack with tasks making up what a job is, you can start to say, okay, this task can be automated. Great, do it. It's probably work people are not interested in doing. It's not about eliminating the entire job. It's about automating as much as possible that makes sense. So for me, it has to go back to basics, and we're missing a piece here for us to actually truly scale. So this is why we talk a lot about workflows. And from day one, we talked about changing the way people work. You, as a technology, as a industrial software provider, we need to codify that domain knowledge into our software to make it relevant for the industry, and of course, in order for it to scale as well. So for us, that's core what we do, and it's really core to the way I came up through the industry myself, because I saw how inefficient it was and I know how it works. So I want to fix that.
Okay. Yeah. It looks like an interesting future from both our perspectives.
Yeah, absolutely.
That you're coming up from this, basically this bottom up, and where at S&P Global we look at these big trends and these big sort of movements in the industry, but they seem to be converging together at this moment, that with technology enabling all of this. And so hopefully that's going to solve some of the challenges that we're facing today, which you said in the beginning are pretty grim. So.
Oh, pretty grim, yeah. And you know, as an industry, we're quite good at adopting technology. If you look at how much new tech we've adopted over the last 20 years, it's not that we're hesitant or reluctant. We are actually a massive adopter of technology. People want to work more efficiently. It's full of smart, intelligent engineers, technicians, operators that want to do things better. So I think it's the timing for all of the new wave of tech. The crisis, as we said, crisis actually forces people to be more innovative. Yeah. I think this is the perfect storm right now to actually take a step forward as an industry.
So that's a big silver lining then.
Let's end on that. Yeah. It's a big silver lining. It's a big opportunity.
Yeah.
But okay, but listen, Oscar, thanks so much for coming in today. Great to talk to you as usual. I look forward to following more of what S&P Global are going to be presenting over the next couple of weeks and months.
Yeah, and the same from us, our side. We're definitely following what Falkor is doing in the next period.
Oh, great. Thanks.